Good morning and welcome back to the Opportunistic Trader for Friday. Thank God it's Friday. I could use the weekend. November 16th, mid-month, getting very close to Thanksgiving, which comes pretty much a week early on the schedule. Interesting market to say the least. I got a text yesterday at about 9:30 and in the morning. And after the opening, and a buddy of mine said, he said, "Are you dizzy yet? Are you seasick?" And yesterday was 100% a seasick trading day. Markets started the day S&P higher, went lower, had like a 40-point range before the opening, actually took out the low at 2670 at about 10:30. And then literally traded up to, I don't even know what price, but a really, really high price, maybe like 35 at the end of the day. So we had a full 55, 60-point range. And what's really weird to me is yesterday when we were on the low, we were unchanged on the year. Okay, so yesterday's gain is what we moved on the year. So the bottom line is, there is right now nothing here that literally you can sink your teeth into. I guess what happened last night is people got short, caught short, covered, new longs came in the market, bought, and then literally NVIDIA, I mean, I looked at it before, it might have bounced, but it was down close to 20%. It's actually down on the year. It actually gave really bad guidance. And interestingly enough, we're through levels of basically December of last year. It's down $36 and 18%. It bounced about $2. S&P is on the low, down 21.5. But if you look at yesterday's range, we're actually mid-range today. So, there's going to be 20-handle rips and 20-handle sell-offs, and it's going to be all over. But ironically, the straddle around 10 is only pricing about 23. So it's come in. Yesterday it was 40. So the straddles have come in. Volatility was also interesting to look at yesterday. In the morning, it got up above 22, almost to 23. When we made the low at 2,600 on the S&P, we were only at 24.25. We made the original low at 2,700 the first time down. We were at 29 vol, but the second time down, we never got up that high. So vol is elevated. It's up again today about 6%. But interestingly enough, the futures are still slight discount to the cash. So to think that the market's going to get out of control, I would think you'd have to see a premium. But it's there's no premiums out the curve. Looking at the stocks that we look at every day, Apple couldn't catch a bid yesterday. Then it said Tepper actually sold out of his Apple and doesn't have a stake, sold off, and then exploded higher later in the day. I don't know if you talked on this on your show, Vince. Good morning, by the way. Thank you for joining us. I know I'm talking your ear off, but they had a fake story in the Financial Times about Lighthizer saying that there were deals all over the table, and then at 3 o'clock Wilbur Ross said no deal. So it's the same fake stories. The computers are really getting whipped around here. S&P is on the low, down 24. It's going to be it's going to be an interesting trading day today. I think there's going to be a two-way trade, but if you look at stocks, they're higher than they were. I mean, Apple yesterday's low was 186 and change. Okay. Facebook traded a little bit lower than that. It looks really heavy. Netflix a little bit lower, but like Goldman Sachs traded down to 198. It's 202 on a downtick. S&P is down 25 and the Nasdaq's down 102. So, it's going to be heavy seller out of the gate today. So we'll keep an eye on, we're going to keep an eye on that. Overall, Bitcoin looks like it's now locked at 5,400. It used to be locked at 6,400. The next lock will be at 4,400. And it's interesting. We talked about this a little bit, which I don't know a lot about, but Vince, you do, talking about the forking of these coins. But something happened like in Bitcoin Cash where they couldn't do the fork or whatever, and somehow on some exchanges, the Bitcoin Cash traded down to like $250, which was down like 50%. So, it's not there on some exchanges, but it is down. I started looking at that thing, it was a couple of thousand, and now it's trading at like 300. So, I mean, it's funny that no one, like CNBC was like the cheerleader to the world on this thing when it was going up last year. They used to go to like farms, mining farms, and this and that. And I don't think they've mentioned the word crypto or Bitcoin on that site for months and months and months and months. So,
well, that's what cheerleaders do, you
yeah.
know.
So, it's interesting that they haven't done that. I was pointing out yesterday, the emerging markets and the Chinese market have actually held up pretty well. China was up last night. FXI is down about 1%, so it's a little bit lower. The Russell doesn't look too good. Things don't look too good, but you got to keep in mind the market is up 40 handles on the year, which is literally, after today, it will be 2% or under. That's not really much, but we're moving from high to low every day now, over 2%. So that's an interesting thing. So there's big volatility in the market. There's big uncertainty. I think we talked about this on the air yesterday, just about how, China doesn't really have to do a deal with us because, like I said before, their feeling is Trump will probably be gone and they can wait it out. So even though we're saying they want to do a deal, I think they're going to wait it out.
Well, there definitely is that is a factor that certainly has to go into their calculus. I mean, when you elect yourself president for life, where you have an election every however many years, whether it's like they do over there versus us, the way to play Trump in general is to play the lawyer way, which is to slow play and wait him out. And I think you're right; they are factoring that in. At the same time, along the same pattern of behavior, China slow plays things anyway because they look in longer time frames, and they have a population that, and I'm not joking when I say this, and they have a population of 2 generations ago was eating tree bark for protein. So they have a higher standard of pain as a population. Meanwhile, we have a stronger economy. I just feel like we're in a better position to do this right now than we've ever been, and we have, I think, a very poor negotiating team doing it. Like right now, to your point, calling it fake news, calling whatever you want to call it. But the bottom line here is, think about it. If you're looking at it as a trader, whether you're on the floor looking at people across from you or you're listening to people talk, for the last 2 months, it's in a microcosm. Here's how it goes. We're not going to negotiate with China. We're tough. And then China says, okay, I'm simplifying. Okay. And then a month later, it's like, okay, we're reaching out to China. And China says, okay. And every time something happens, China just says, okay. And now, and I did talk about this in the gold, in the gold thing, that China basically hasn't moved their position at all, and these guys are just trying all kinds of tactics, picking up the poker chips, like you're going to throw them in the pot, splashing them, and China's just saying, okay, we're waiting. I'm not saying that China loses or wins. I'm just saying that it is a waiting game, like you're implying, because China's people will tolerate pain more than we will. And that's because we have democracy here. On the flip side, our economy and our Fed policymakers are better at it than they are. So it's kind of like a ham-fisted negotiator on our side, with good policy people, and on their side, they've got better negotiators with worse policymakers.
Yeah, I just wanted to touch on that a little. It's not important. I'm looking at gold breaking up higher here. I don't know if you talked about that. And, they come up with OPEC cuts, which we knew were coming. But oil is up actually $1. It just came off a little. It was up $1.30 a minute ago. It's up $1.12, and gold is off my page above 12.20 again, just whipping around. So
Yeah, gold's
there's
reacting. I mean, you could just look at gold's react. You could just simply say the dollar's a little weaker. Gold's reacting to that, but gold has been um, um, partly. My contention is gold is more and more tied to the Chinese yuan, which is related to the trade thing. But I think anytime, if you want to keep it really simple, and if you're not trading gold, if you're trading Asian currency pairs, as many of our members do, good news, whether it be true or not, that's perceived as good news coming out of trade negotiations is bullish for Asian currencies, is bullish for gold, is bearish for the dollar. The dollar won't be so weak though with the whole European issue of Brexit and Europe. There you have it. But yeah, gold's higher today, probably reacting in a belated fashion to yesterday's news. Who knows? Silver was up yesterday, gold's up today. So it's it reacts the way it wants to. I'm actually looking at a silver trade today. Can I bring you back to Nvidia for a second?
sure.
Um, Tom, you described to a T what happened yesterday at Nvidia, and I think people should look at what Tom McEntee did yesterday. After around 11:45, 11:50, when Nvidia was cratering, um, he bought a calendar call spread. So he sold. Actually, he bought the November 25. He bought a diagonal. He bought the November 23rd 225 call, and I'm sorry, he sold that, and he bought the November 30th 230 call. So what he basically did was, if you're trying to understand it from a term structure or time spread point of view, he basically said, I don't think we're going up in the next week. I think we might be going up in the next 2 weeks. I think we might be going up in the next 3 weeks. So he sold an option that he feels has very little chance of going in the money, especially after the earnings, captured that premium and used it to finance what he thinks is possibly a move higher after the news. He likes to trade things like this around the earnings, sometimes vertical, frequently horizontal. But I would, there's something to learn from that sort of trading. Even if you don't trade the way he does, he's going to say, "Oh, the earnings are out. Nvidia stinks. I'm going to sell front month call, and I'm going to take that premium, and I'm going to buy a deferred call because I think once the news is out and the market can continue rallying." He trades on earnings. Someone who doesn't trade calendars may say, "Oh, okay." When the market makes lows like that, you may just buy a call or buy a call spread or buy a 1x2, or you may sell a put spread and buy a call, also known as a three-way. But those are things to look at. There's a trade. Larry trades regression to the mean a lot. He looks for, at least I think, he looks for things that don't make sense and sees what's dominant during a time period and trades on that. I like to trade breakouts, and Tom likes to trade events like earnings. I like to trade events too, but not earnings because I'm not going to pretend. I think there's too much noise in them, but Tom likes to trade earnings. There's so
Well,
many
he
different
likes
ways
to
to trade
trade
them.
earnings because his risk reward is unbelievable, and he's not putting up a lot to do these spreads. So he's putting on, a bullish spread for 50 cents. He's taking shots where the risk is extremely defined, and if he hits, a bunch of them, he kills it. But I don't, listen. I mean, Nvidia is, just a one-off case.
I know, but I'm just saying, for people that are learning or want to look at different trading strategies, options limit risk, but calendar spreads may be confusing to a beginning or even an intermediate trader, but they are a different way of what's the word
Oh,
expressing not now later type
discussing
of move.
that, I would think, depending on your knowledge of options, um, you know, I would look at it this way. If I was teaching it, I would say the first thing you want to do is learn options and then utilize options in a way where you can vanilla. You think the market's going up, you're buying a call. You think the market's going down or the stock is going down, you're buying a put. That's the vanilla, okay? And then from that vanilla, okay, like an ice cream, you can put different things on it. So all of a sudden you do a call spread that sprinkles, or whatever, and then
Right.
you put the cherry on, you're doing a calendar spread or whatever.
That's
But there's
absolutely true. It's what
a
kind of risk are
million.
you comfortable using
Well, no, you
to
just
mitigate
got
the
to
other risk?
learn. You got to learn from the ground up, and the basic ground is understanding what a put is, what a call is. Okay.
Right.
Then buying a put or call. Okay. And then from buying a put or call, understanding that you could create the Sunday by doing a ratio spread. You could buy one call, sell two of another. You know where you're protected. It's all mathematics. You could buy a call spread. You could sell a put spread. You could buy a put spread. You could do a calendar spread. You can do butterflies. There's a million things that you can do. Okay. But it's, it all boils down to math. And that's the one thing I'll say like about Mac. He's rolling out spreadsheets. He's got information, and the thing is, he's been doing it for so long, he knows what he's doing. So, he does his spreading. He does his thing. My thing that I like to do that has made me a lot of money over years and years and years and years is doing vanilla ratio spreads with not a lot of time in the market. So I'll buy one, let's say the market's trading at, we'll use S&P 2713. I'll buy the 15 calls and then I'll sell, the 25 calls. Okay, so I bought the 15 calls and I'm paying, let's say 11, and the 25 calls are 6.5. I could put that spread on for a small credit. I own it for a credit. And the bottom line is I'm protected up to 35. And there's a lot of things I can do on the way up to 35 because 35 is 22 handles from here. Okay. Once we move 10, I might sell a put spread. I might buy some other calls, I don't, there's a million different things that you can do,
Yep.
But
I agree. That's the point. Well, you once you understand options, whatever type of risk you're more comfortable with. I'm comfortable with, a person is comfortable with this type of risk. I'm comfortable with risk over time. I'm comfortable with risk vertically. And you tailor, like you said, you build your Sunday based on the type of risk you're comfortable with. I'm comfortable trading from the long side, the short side. But that's why options can be tremendous if you understand the math first. You can tailor make a structure that's going to give you the expression of opinion you want and the type of risk that you can stomach. I'm not worried about buying IBM at $5. Okay, then sell the $5 put. That's risk you're comfortable with when you're making your other structure. I'm scared to death IBM will go to $10. Well, then you're not a seller of the $10 put. It's a matter of what you're comfortable with in terms of risk.
Yeah.
But yeah, you're right. It's an ice cream sundae. That's true.
Yeah.
Dollars getting slammed.
Slammed? Where's it
means-
getting slammed?
I'm looking at an hourly chart. The dollar has had a big move in the hour.
Yeah, it's not moving much though. I mean, the euro's up 40 pips. So
okay, well, I'm talking about day trading, not month to week. The dollar is weaker and gold is higher, and there's something else.
Moderately weaker. I agree. Gold is ripping. Actually, it was up 4 when we got on the air. It's now up 8. The trade.
Now let's be clear about something, Larry. As a joke, let's be clear. Gold is up 0.8%. The dollar is down 0.5%. So how could the dollar be? Forgive me for doing this tongue in cheek, but I have to say it. How could the dollar be doing nothing and gold be ripping? The point is, they're both doing something violent for the next hour. I don't know what's happened the rest of the day.
I agree, except that I'll give you an example. Okay. If you're trading nat gas, okay, and it's up 80 basis points, that's not a move when it's moving 15% a day. What I'm saying is gold's up $8. Okay. For gold to be up $8, that's a lot that from what we see in general. Okay. The dollar moving, a little bit, maybe it moved, it's all a percentage of what the percentage is.
No, you're actually talking about volatility, and you're right. Average daily range for gold is $7. The dollar is still in its average daily range. So yes, you're right. Gold's overreacting.
It's not, it's whatever. I just like to bust on you, but
I know, and I give it back. But we're all having fun.
I know, but I wanted to talk about the trade that no one's talking about. Okay. It's a market that we haven't covered that's actually had a very, very good move, a counter trend move, a move that really is blowing people out because people were positioned in it. I'm trying to get you to guess what it is, okay? and it it continues to rip higher when people thought it was going to go much, much lower. You ready for me to give it to you?
Yes.
Bonds in 10 years. Bond is on the
Really?
Bond is in the 139 handle on the way to 140. That thing traded 136, and the 10-year note is probably going to break 3% on this move, and it was just almost 3.25, and everybody was negative. And I wanted to touch on this because I was reading a little bit on the way in, and there's like rumblings in general that there's actually a slowdown going on in a lot of companies that are being seen by CEOs and professionals inside the companies, but they're not really coming out and saying it because they don't want to upset the market. But they're seeing massive slowing. So it's going to be interesting, moving forward here to see, what in general, that how much slowing really hits the market. And maybe they're just putting this out right before the Fed meeting in December. But, the market may not be as firm as everybody thinks. As the bonds rip, today they're ripping.
Right. The market, no, to your point, the actual facts, I put facts in quotes, but they're facts as far as I'm concerned. God darn it. Did I say darn it? Larry, you're training me very, very poorly. I'm not using profanity. But no, the facts that corroborate what you're saying are the following. Fed futures discounting future rate hikes are decreasing a little bit. And I think the market is starting to discount I'm not saying they're right. I'm not saying they're wrong. I think they're wrong, but my opinion is my opinion. The Fed might have to back off because like you said, the whispers of corporations like, hey, we're having a little bit of slowdown. Like you said, bonds are doing what they're doing. The dollar is starting to weaken with expectations of possibly a pause or a decrease in the rate of QT. In fact, if you look at futures on Fed rate hikes, whereas we were looking at 3 rate hikes next year, maybe 4, what's happened is you're seeing over 2019 distribution, the probability of us getting rate hikes is the same, but they've moved from, say, 25% probability per quarter to like 50% in the first quarter and 25% in the rest of the year. It's kind of like things are getting front loaded, like maybe we're coming near the end of a rate hike cycle, which is what the companies are saying to you and what you're reading. Whether it's right or wrong, who knows? But that is what's happening. That's a good point.
Yeah, I mean that's a little bit what's out there. I mean, I'm just looking around, and there's literal decimation in stocks. If you're not in like the 5 stocks that are up on the year, I think most people are down 7 to 10% on the year. So it's an interesting it's an interesting thought, in general. I wanted to discuss one stock that's crazy. It's actually utility. I don't know if any of our members or viewers are in it, but this PG, this PS&G, this Pacific.
Because of the California thing?
Oh my God, dude. The stock went from 50 to, I think it traded 16 or 17 yesterday. I want you to know it's up 45% today at $26, up from 17. It is flying around. Everyone thought or thinks it could go out of business. I don't know if it will.
This is I'm sorry. I'm gonna be a little bit ignorant here, but this is a straight up utility, isn't it?
Yeah, but there's external factors. It's all about the fire. And
right. That's what I'm saying. I'm saying they have a crisis because of the fire, but utilities can't.
But they have no insurance. Zero insurance.
And
they basically admitted in an email that their spark started the fire. So I don't
know. Lovely. Okay, so for the audience, this is a learning moment for me. Ready? I'm going to ask a question so I can understand what I'm talking about.
I might not have the answer.
Oh, well, that's okay, because if you know anything more than me, then you're infinitely, one is higher by 0 than infinite. So basically, let me see if I understand this, and I'll read about it. I've read about it. I'm just too busy looking at smoke pictures. So it's a utility, and utilities in general are rescued if there's an emergency. But the fact is that they may not have the proper insurance, and they may be liable, which may make them the cause of the receiver of the finger point by the president, which would really screw them even though they're utility, they're not as protected as you would think. Is that what I should be walking away with? Because they
Pretty
are
much. I mean,
potentially liable.
this is an external crazy event that's still going on. But we'll see. But I don't trade the name. I just been watching guys looking at it. Overall, I don't have an opinion on it in any way. I just will tell you the market in S&Ps is down 16. It's rallied half, almost a third back already. 5 or 7 handles of the 17 were down. It's funny, and I really I don't get it, but I see this. When the market is going down, everyone wants to sell. And when the market is going up, everyone wants to buy. And the market is really just whipping around. It's just going up and down on air. So it's a great trading market. I think the market is stuck here pending any fake news or news in general. But it's a good two-way trade. Look out for the market. You gotta reduce your size a little bit, widen your range a little bit, and realize that we're at a 20. The volatility is at 21. If we get a slippage here, it could go to 22 or 23, and then you're going to have really big moves. I mean, listen, we were talking about the straddle yesterday at like $40, and we had like a 60. Actually, we had a $65 intraday range yesterday. So the moves are monster. Maybe today will be a little quieter. It feels a little quieter, but you never know. Overall, like you said, the dollar is weaker. I'm going to go with it's really weak. The dollar is weaker. Actually, the euro is ticking up a bit. Gold is now up 9. And,
Yep.
everything on my board other than S&P and NASDAQ is green. The bonds are ripping. The 10-year is ripping. The 10-year is actually up 9 ticks today. This is really interesting. I mean, I know this Fed guy. What's his name? Richard Clarida or whatever. You know this guy?
Okay.
He basically said that we're at the end of the cycle.
Yeah, a lot of fund managers are saying that too. But now the Fed people are saying it. So you're like, are they floating red herrings?
Fed interest rates, short-term interest rates, are near what is considered to be non-stimulative, a key factor in considering the future path of monetary policy. So basically, the Fed is kind of signaling in a way they're at a neutral. My true opinion is, they got more to do. I'd say 2 to 3 more. They're going to reduce next year to 2 hikes. I mean, I don't know. What's going to happen if inflation creeps in? It never does, but what if it does? That's going to put a wild card on the Fed. So we got to keep an eye on inflation. We do expect a December rate rise, and then we do expect one in the first quarter. But these are quarter point baby things. I got to tell you, it's funny. I was with a buddy of mine yesterday. We traded together in the middle 80s, like 84, 85, 86. And so on, up past the
suspenders crash. and 10x in your hair.
But I'm telling you that I stood on the floor with him, and this is true. Paul Volcker was the head of the Fed, okay? And we were standing in a pit, and we're looking around, and all of a sudden it comes across the screen. Fed raises interest rates. We're like, huh? Fed raises interest rates. They were doing interest rate hikes and cuts without meetings. Now they need a meeting, 17
Right. I do
security,
remember that. I do
17
remember that.
security guards. They got to signal. They got to give the press release out before it
Don't,
even happens.
don't you remember when Greenspan's walking over? How fat is his valise? That determines if there's going to be.
I know, but that was.
You remember
all,
that? I remember. I mean, I remember. Listen to me. I was selling gold jewelry on street corners during the '80s. You're so old, Larry. Okay, I'm as old as you, but I was still selling gold jewelry on street corners. But I remember that. Fed independence was so independent. It's like it was independent and not accountable.
Listen to
now
me.
they're independent.
But they always did the right thing. Like it's really strange what has gone on with the transparency card and all this other stuff.
Yeah.
It's just it's pretty interesting. It's funny. I like look at the markets and I kind of laugh to myself because it's all legitimately crazy price action waiting for the next fake news headline to come out to move the market. It's like so weird. Like when we started this, we were down basically $25 and now we're down 13 and everything's fine.
I'm not. And isn't that good for guys like us where we trade stocks and not economics because the economic news moves the stocks? But
I'll just
that's
say this.
good for us.
It's good for
people
us
that trade
as
like
long
us.
as long as you're on the right side, you could get your
No, but fair enough. But it's
listen to me. But I don't like it. I'd rather have much more contained moves that I could figure out why we're selling off or rallying. I mean, literally, the S&P literally just took off more than half the move since I walked in the office this morning.
You're the Frenchman with the loaf of bread under one arm and the violin in the other, complaining that you don't have a lot of opportunity every freaking morning. And then the market opens up and you find a trade. I'm tired of it. We're done with it. The bottom line here is the S&P on a year-over-year basis is 2% volatility. The S&P on an hour-by-hour basis is 2% volatility, and you love it. Just admit it.
No, it's definitely. Listen, it's definitely good. Again. I don't like the outsized movement. That's just me. I mean, I like my ideal environment is a 20.
Oh, I see what you're saying. I see what you're
range,
saying.
Okay, so I can put
right.
some size on, trade it, and But now you can't listen to me. If you let's say like I'm getting ready to make a sale. I'm not selling yet. Because I could see that the machine is in buy, swing the wheel mode.
Right.
Okay, but I want to sell. Okay. But the bottom line is you can't even really use a $10 stop because it's not giving yourself enough room. So now you have to cut your size down, trade, for a little bit more profit, and trade that way.
That's exactly right. And I think I want to distill that for people because as you're saying it, you're reminding me, I'm teasing you, but the reality of it is this. I'm saying this to subscribers and non-subscribers who may be listening. The reality is, in a normal market for intraday day traders like Larry and myself and other people that are team members and experts, there's a lot of expertise here. I'll say that with a small E and a capital E. For people like us who like to trade volatile markets, that it's easier to identify if you're an RTM trader. You say, okay, this seems toppy because let's say you're looking at something simple like stochastics, or this seems like it's picking up momentum. The problem with algorithmic HFT trading, I think Larry's point is, okay, it's up 10 handles. This is a level that I might want to fade and lean into it. And then it pops 5 more because of algorithms that are late to the party. But
I'm going to call me, Larry.
I'm just throwing 5 in there.
I understand, but I'm calling a timeout because it's not 5. The whole point is it's not 5. 5 you can deal with. 20 you can.
Okay,
you can't
so why don't I make it a little bit more accurate?
What I'm saying to you is, to me, and I'm not doing this trade because I've had a bunch of good ones. In general, I'm not doing it. Okay, but I will say this. Okay. The bottom line is if you sell 27 22s where we're trading right now, which is basically the low I think was what was it low? I saw 07's print, low 08.75. So you're now down $14. You're down more If you sold near the low, then the whole down move. So
Right.
right. So to me, this is a perfect level. Okay, maybe 25s, 26s if you can get lucky. But the problem is the computer is so insane right now. It's so out of control
Right.
that they'll buy up 40. They don't even care. It's not a human. There's no way a human who didn't buy them down there is buying them up here. So the problem is the computer has just gone mad, and you've got to give yourself a little bit of leeway here, in general. And that's what I see. I mean, the market. Listen, the market and the vol were exploding when I walked in. Okay,
Right.
the vol has come off more than half the down move, and the S&P has rallied. I mean, to me, this is a good level to short. I mean, you have a little bit of risk to the opening because they're going to price off the opening of these stocks, and they've all come
Well,
back for
this
the
comes
most
back
part.
to what I'm trying to distill this thought process that you have that I'm nodding my head to and I'm agreeing with. I want to distill it for people that are but it's kind of like when you're working with a trader, sometimes you have to read the trader's mind. And here's what I'm hearing for other people. It's like what used to be normal volatility is now the beginning of, say, an ice skate where the market's going to go a little bit further than you expect, or maybe a lot further in light volume, and that's the algo. So, as you said, we like these markets, but we lower our volume and we widen our stops. And it's unfortunate because we want to put a little bit more meat on our trades, but we want to be careful because algos can take things more irrationally than they used to be.
I mean,
Does that make
yesterday, yeah,
sense?
well, yeah, but yesterday, let's discuss. I mean, yesterday we had a $65 range in S&P. I mean, that's monster. I mean, that is just
Yeah.
huge, huge range. So today we're taming basically a $24 range. Okay, that's tame for us. Okay, so here's the thing: we're either going to take out the low or the high today, or we might take out both. I mean, people are just like, it's funny. I have a lot of traders out there that I talk to, and if the market opened down at 2708, everybody would have been bearish, and now that we rallied, everybody wants to
Right.
be bullish. So
Well,
the market's not cooperating. There's no clear trend, at all. Some stocks are getting annihilated. I mean, I don't know if this stock, Nvidia. Here, let's look at Nvidia.
do we have to?
Nvidia has not really. Well, it's rallied $3, but it's down 18%. Market comes in, it'll go lower. Now they want to buy Apple. It's at 190. The low was 186 on this move. They like it now. Micron looks heavy. FXI is still holding in. Goldman doesn't go down really today. It's well above its low at 198. It's at 202. But here's my question, Vince. We're coming
Yeah.
into year end. Okay, and you're long Goldman. It's down
Mhm.
over 20% for the year.
Right.
Don't you think some of these people have to make a move? They have to
Yeah.
get
I
out.
mean, I
It's
mean, if that's
actually
the only
down
stock
20.
I'm
It's
long,
down 21%. After the opening, it'll be down 21.20. Listen, I don't know how the market's up. I mean, I can scroll you 50 names that are down over 20%. AT&T. There's a zillion of them. Okay,
right?
but then you have Apple up to. Apple actually is only up about 12 for the
I can
year.
tell you, I can tell you right now for the last hour why the market's up, and whether it matters for the rest of the day, I don't know. But the dollar is weaker. Okay, the yuan is weaker. I mean, lower, meaning it's stronger, and that's bullish for stocks globally. That's
But
a
the
risk
market's
on
down.
global comment. And whether that matters the rest of the day, I don't know.
No, but we're
Whether that matters the
down.
rest of the year, I don't know. But right now, that's the trade. That's what's going on at this very
I
moment.
know,
I want to buy
but
silver.
you want to buy silver?
I want to buy silver, but it's my risk reward's not there anymore. It's
Did
too
it rally?
it's moved too much too quickly. That's the problem.
Yeah, so you sit back. Let's look at the straddle. Hang on.
Yeah,
I want to look at
that's
the
a good point.
straddle again. Now we're up to the 20 straddle. Before we were looking at the 10 straddle. So the 20 straddle is only $20, $21. Kind of quiet. So I'm not expecting a movement like yesterday, although anything is possible. I'm looking at a little bit more range bound in here. We should come back in here. If we go back down, it's not going to be pretty. We'll see if we hold the '08 level. That's the next trade. I don't know what came out that rallied us 15 handles since
Well,
the opening.
I'm looking for
The DAX is terrible. It actually is fading down towards the lower end of the range. It's about 40 off the low, but it's 150 off the high. I mean, and that index is blown up. I mean, listen, if you're in any of these world indices other than the US, it's really bad. Really, really bad. So, looking at those indexes, the DAX is down probably close to 10, maybe more. Let's see. Go try to pull a quote here. Let's see if we can get it. Can't pull it up. But if my recollection is right, I mean, it's down over 10. It's down almost 15. So, these markets are crushed in my mind. And, Hang Seng is down 15, China's down 20. We're just chilling out. We're relaxing.
Yeah.
The DAX is down 12.81% for the year as the SPOOs rally again this morning. They just keep rallying. They're down. If our markets were down 12, it would be Armageddon. CAC down 6 and FTSE down. Wow, FTSE broke 7,000 today. FTSE's down pretty decent on the year. So these markets are all down. The world is down. Other than us, we're up. I don't think it continues on. But again, we're just looking to get through today. We got to figure out how to get through today. That's our job for everybody out there, is to get through today.
Exactly.
Give out some winning ideas and thoughts, and hopefully everybody does okay. But I'm pretty much cooked. I went through a bunch of stuff today. I went through options on a very basic level. We went through looking at all the European markets, all the Asian markets, individual stocks, gold, crude, bonds. So I think we've touched pretty much on everything today. Gold continues to rally. Got to be through levels that are interesting. Oil's coming in a bit. It was up about $1.40. It's up $1. It's going to be an interesting day. Again, the straddle is relatively low. It's only $21. So got to keep an eye on that today. And I don't know. You want to go over the schedule for today, Vince?
I do. I want to throw a couple levels in first. Since look, my model is blown, meaning I can't trade it because the risk reward wasn't there. But if you're looking at precious metals or the dollar or FX, especially Aussie dollar, starting with silver, and trade accordingly, I would look to be, if you're bullish, I look to buy pullbacks that are above 14.29 with a stop close below that. Gold, I don't see any good risk reward. If you want to be insane about it and try and buy it at 12.19, you'll probably get stopped out. I do think that a lot of this risk on today, and this plays into stock players too, a lot of this risk on is optimism on trade talks, which will be coupled with, oh, by the way, we changed our mind. There's no real optimism. I would not be surprised to see the market dump either today or Monday. But going to the schedule, after today, following the AM roadmap, Joe Vaclavic of Standard of Grain is discussing the ag overnight action. At 10 a.m., Phil Flynn of the Price Futures Group, as always, will be with us. He's also a Fox Business contributor. He'll be joining Larry to talk energy and macro. 10:30 a.m., Alan Hill of Treasury Consultancy will be talking Brexit and FX. He is pretty plugged in politically, so it'll be nice to listen to him on that. I'll be putting up a post on that as well later, as well as Goldman's picks for the year, top trades for the year. I'll be putting that up. It's been circulating out there. I'll put that up there. And at 11 a.m., we have Edwin Meyer from Commodity Research Group talking metals and macros. It is get me out before the close Friday. Commitment of traders will come out, and we do have tick data, which is backward looking, but last time it came out, the market really cared about it. But today, tick data comes out, which is flows in and out of the country of money, comes out after the close. So watch for futures on that. There'll be others on the air. If you have any questions for our guests, you can either email us back and we will ask them, or subscribers can ask in the Q&A tab while they are speaking.
Perfect.
That's it.
Well, thanks for joining me. I'll see you in the chat. I'll be in the chat all day and back on the air right after the opening.
Absolutely.
Good luck to everybody. It should be a nice whippy day to whip some people around here. So be careful. It seems to me, just a parting shot that they want to buy them again, as they always do. So be leery of that. And we'll be back to everybody after the opening, and good luck trading.